You can see it at petrol pumps, in restaurant bills, clothes, even second-hand cars. As the economy reopens, prices are on the way up. Inflation collapsed along with the economy during lockdown. Now the Bank of England thinks it will hit a peak of 4% this autumn, the highest rate for a decade. But it's convinced that will be temporary. But if higher prices prove more persistent, can the bank stick with rock-bottom interest rates and continue with its programme of quantitative easing, pumping £875 billion into the economy?
Governor, if you think inflation is going to 4%, a 10-year high, and interest rates are likely to edge up as well, it'd be reasonable to be asking for a pay rise, wouldn't it?
We've also said that we think the increase in inflation is going to be temporary. Now, that's very important. I think it's very important in terms of thinking about pay rises and labour bargaining, because it is important to take the future view and say, where's inflation going to come back to? And I say that's very important because one of the ways, of course, one of the principal ways in which inflation can become embedded is through the wage process. So it will be very important that this increase in inflation is temporary, is seen to be temporary, and therefore doesn't become embedded.
But the risk, as you say, is that it becomes self-fulfilling, that people think, well, inflation's going up for 6 months, I need wages to reflect that, and that becomes a spiral.
Well, of course, in the past, we've seen periods when that has happened, and I'm afraid that's why it's very clear, and we've said very clearly that if we see this becoming a pattern, and we see this risk growing, we would have to act as a central bank. We'd have to act on monetary policy, and we'd have to increase interest rates.
Right, but why are you sure at the moment that inflation is going to come back down? Well, lots of people are saying, well, it might not.
Well, we've spent a lot of time looking at the causes of it, which are quite unusual. They're quite specific to some of the things that we've been going through with this. We're having a bumpy recovery from COVID. There's this sort of recovery of the economy, demand in the economy, supply in the economy is adjusting back in quite a bumpy fashion. We've got some other things going on which are rather unrelated to COVID. We've got a world shortage of semiconductor chips, which, by the way, it turns out we all rely on for most of the things we do every day. So if you talk, you may have done this, if you talk to car producers at the moment, I've talked to car producers, they are, car production, not only in this country, but worldwide, is very, is well down at the moment because they can't get the chips. Now, there's every reason that's going to turn around. In fact, there's signs it's already, I think, turning around in companies' production plans. So we expect that to correct itself.
But I suppose you're also expecting people to go back to work.
Yes.
And that's a bit unpredictable at the moment, isn't it? Because quite a lot of people might say, well, if my job has gone or if my job has changed, I'm not sure I want to rush back and just do anything. There are hundreds of billions of pounds of savings at the moment, so people may not have to go back. And that will mean there's still a labour shortage, prices go up.
That's a very important question because we've seen a big shift around in the employment situation in the country, and we now have a very strong increase in vacancies. And as you rightly say, it is crucial, frankly, that we see people coming back into the labour force and filling those vacancies. Now,
that's your message, is that you want people to go back?
Yes. Bluntly, yes. Now, the furlough scheme is running down. People are coming out of the furlough scheme back into their jobs or back into other jobs. That's happening. But we've also had quite a big increase in what the statisticians called inactivity. It always sounds slightly pejorative, but it's people who are not working and not searching for a job. Now, past evidence would suggest they'll come into the labour force, but we need to see that happen.
You decided to go ahead with your plans on quantitative easing, the creating of money. There was a very critical report by the House of Lords very recently, which asked whether you're addicted to QE, and it said they are concerned that the bank may come under political pressure not to take the necessary action to maintain price stability. And they also said it had become apparent that there was a widespread perception, including among large institutional investors, that financing the government's deficit spending was a significant reason for quantitative easing.
If there was a widespread perception, as they say, then the evidence of that would be in financial markets, and it isn't. So I'm sorry, that is just not true as a statement.
Well, but they say, if you look at the timing and the amounts, there's a remarkable coincidence between what the government has spent and what you've done in QE over the same period of time.
As I said to them, and I will state again, I said, look, let's take last March, when we announced the biggest piece of QE. it was my first week as governor, we had a serious dysfunction in financial markets globally, and we had to step in. The idea that we knew what the fiscal deficit was going to be and what the government's borrowing requirements were going to be at that time, I'm afraid is just so far removed from the truth. I mean, nobody knew at that point what the impact of COVID was going to be. Nobody knew, therefore, what the government's borrowing requirements were going to be. So the whole idea that we sat down and said, well, the government needs this much money, we better get going, it's just, I'm afraid it is so far from the truth. Now, I'm sorry, there are people out there, you rightly say, who allege this, but there is no evidence, and I've said this to the committee.
Just finally, I mean, there is a big vacancy on the Monetary Policy Committee.
Yeah.
Do you accept that you are dominated overly by white middle-aged men, and that should be a factor in whoever joins the committee, that there is a strength in diversity?
First of all, actually you can observe by some of the recent appointments to Bank of England committees that a number of hugely talented women have been appointed to Bank of England committees in the last few months of my time. And I'm very pleased about that. Secondly, we issued a very important review that our court undertook of ethnic diversity in the Bank of England. And the way I would describe that is there has been good intention and work done in the Bank of England up to now. But that review, and I asked the court to do it because it's very important, has made very clear we have got to step it up and we have got to make more progress, and we will do that.
Governor,
now, I can't give you that answer on individual appointments, but we will do it.
Governor, thank you very much.
You're welcome. Thank you.